If you're wondering where the jobs are, they're with the startup companies right now. Gilt Groupe, which is the online invitation-only retailer, is hiring for about 100 positions in the New York area. That's not why we were talking to their CEO, Kevin Ryan, but it was one interesting nugget that we got from that interview. We started talking to him about why he has taken over the helm as CEO from Susan Line, who once ran ABC and had been really running Gilt Groupe for the past 2 years. Kevin made his name with DoubleClick, a tech company he founded and then sold and then was purchased by Google for a few $1 billion. He's got an umbrella of businesses, Gilt now one of them. And I asked him yesterday just why he is out there raising money from private equity firms and what he intends to do with it.
That money just continues to go really primarily to launching our new businesses. So, we start something from scratch like Gilt City. It's obviously not going to be profitable day one. We're already in 6 cities. We already have probably 50 employees that have happened really in a period of 3 or 4 months. So you're going to have to invest ahead of time to do that.
Now, in building out the infrastructure of the company, you're changing your warehouse locations, moving them more to the middle of the country. I mean, what other changes are you making to contain costs and add efficiencies?
In warehousing, we have launched a big new warehouse in Louisville, Kentucky, which we're very excited about, and that will continue to build over time. In technology, we're just getting better by investing in personalization, scalability, better features that really help consumers make decisions. And then on the marketing side, we're doing more and more sophisticated things to be able to get new customers, acquire new customers. What's essential to Gilt is that we don't show you 10,000 shirts. We show you a certain number of brands that
it's about the curation
of the site. Curation, it's the right thing. A lot of customers feel a little bit overwhelmed by the selection online. And so it's a real value when we bring it to them and say, look, here are some great things that we've selected and you can trust us.
Personalize it to the viewer as they log in with their account because it's still invitation only.
For example, when you get an email every day, that's one of 2,000 versions that go out. And that's based on everything you've purchased in the past, everything you've looked at in the past. It's customized.
So you've got a tremendous amount of information about the consumers who do go through with the purchase.
More so than almost any e-commerce site you can imagine, because you can't get onto Gilt without signing in.
Right.
So as a result, we actually know every single page any member has ever seen.
Wow.
In a normal website, you don't know that. You only know some of them, if you have a cookie on them, if they're on the same computer, but you can't track everything. We have 100%.
So you just went through with an acquisition, Bergine, that you closed just a week or so ago. Do you plan more acquisitions? Yeah, I don't think it's not the biggest part of our strategy. We really, find there's more value when we build things from scratch. But because now we're in 6 verticals, so men's, women's, home, kids, travel, and local services, we'll find selective acquisitions that are in one of those categories that we think adds to our overall expertise. So Bergine started in San Francisco. They have a strong presence in San Francisco and LA, and we thought it was a great team, so we thought that would make sense to bring on. So I think selectively there'll be other acquisitions over time. When we spoke with Susan last, she indicated that an IPO was at least a year off. Is that still your point of view, and why that far out? Yeah. Oh, yeah, I would say, I think that this is an IPO candidate at some point, but it's certainly not in the next 9 months. And I think it's much more likely that if it happened, it would be more of a 2012. And the reason is that, we're still growing really quickly. Valuations aren't that great in the public markets. There are lots of costs of going public, and we don't feel that we really need to go public right now. It's a big distraction, certainly for the senior team. And so really think a year or year and a half from now will probably be a better time than now. Gilt is only one of many businesses that you're in. Looking back at the experience you went through with DoubleClick and the sale of that, ultimately a sizable sale to Google. I mean, what did you learn from that would change the way you would consider a sale this time around? Would you put Gilt up for acquisition? My strategy always is I never think of an exit strategy for a business. So I don't think about that. But at the same time, any business I've ever been in, including DoubleClick, if someone came in and said, I'll offer a very substantial number and I thought it would help the business, we'd listen to it. But the reason you haven't heard any acquisition rumors about Gilt is that we're not out there talking to anyone. And so I don't think it's that likely. You just explained how much information and visibility you have into the consumers who go to your site and make transactions. What is it that you're learning about the state of the consumer right now? So I don't think that our data reveals the state of the consumer as it does. It just reveals that
you as a consumer, maybe you like you buy kids clothing or you don't, or you buy high-end women's fashion or you don't, or you really prefer jewelry or you don't. I mean, what we're seeing in general, though, I would say from all of our retailers out there, that it's going to be a cautious Christmas. I think people are not petrified as they were, maybe a year or two ago, but they're slightly nervous. Most brands cut back a little bit on how much they were ordering, and so I think people are expecting it to be an okay Christmas, but not great.
Election day has come and gone, and now it's Fed Day. We're talking about not only investing in a new Congress, but figuring out what's next in terms of the path of monetary policy. How big and how significant will this round of economic stimulus be? Jim Grant will be with us, as will Mark Zandi. So two big economic minds helping us to handicap what's ahead with the Fed.